Tesla just announced a product that could put a full-time digital employee inside every computer on the planet, and they're calling it, I love this, Macrohard, or Digital Optimus. You heard it right, Macrohard, not Microsoft. By the end of this video, you'll have a framework for whether that makes Tesla the most important stock to own in the next 5 years, or the most dangerous valuation trap in the market right now. Stay for the valuation section. That's where it gets real. So what is this Digital Optimus about? Imagine this. You're a small business owner. You need a logo designed. You type, "Design me a minimalist logo for a finance brand in Canva," into Digital Optimus, and walk away to make coffee. By the time you're back, Canva is open on your screen. The logo is built, the brand colors are applied, the file is exported. You didn't touch a single button. This is what Digital Optimus is about. It is not a chatbot, not an autocomplete. It is a white-collar worker. That is, word for word, what Elon Musk announced on March 11th, 2026. And we are not talking about a new car model here. We are talking about Tesla positioning itself to go after a $10 trillion labor market. The implications for Tesla as an investment? I mean, most people haven't even begun to think through them. In this video, we're going to do that work. We're going to unpack what Digital Optimus actually is, the architecture, the hardware, the real competitive edge. We're going to look at what it could do to the global white-collar labor market. And then we're going to get into the part that matters most for this channel. What does it mean for Tesla, the stock? Both the bull case and the bear case. This is probably the most consequential product announcement Tesla has made since the Model 3. I know that's a big claim, and I'll back it up. Picture this. Your car is in the garage right now, doing absolutely nothing. What happens to Tesla's valuation the moment millions of those cars start doing your job? All right, let's start from the beginning. Because to understand why Digital Optimus matters, you need to understand what existing AI agents can and cannot do. Right now, every major AI tool, ChatGPT, Claude, Gemini, they all share the same fundamental limitation. They're language tools. They read text. They generate text. They can describe how to do something, but they can't actually go do it. They're locked inside a chat window. There's been a wave of so-called computer use AI agents in the last year. Anthropic has one, OpenAI has one. They can technically operate a computer, but here's the problem. They do it by taking a screenshot, sending it to a server, waiting for the server to decide what to click, then sending back the instruction. Take screenshot, send to cloud, wait, get instruction, click, repeat. Every action requires a cloud round trip. That adds latency, and it costs money, real compute dollars for every single mouse click. Relying on this approach to execute real-time computer work at scale is simply unsustainable, both financially and in terms of the power it consumes. Digital Optimus is different. Here's the architecture, and I'll keep this tight. Grok, xAI's AI model, sits in the cloud. It's the brain, the conductor. It understands what you want and plans every step. Below it, running locally on Tesla's AI 4 chip in your device, is the fast twitch execution layer. It watches your screen in real time, 30 frames per second, and physically executes the clicks and keystrokes. Think of Grok as the conductor. The AI 4 chip is the drummer, fast, repetitive, local. One thinks, one acts. Let me make that concrete. Say you tell your Digital Optimus, design a logo in Canva. Grok plans the steps. The local agent executes them. Opening Canva, navigating the menus, picking the style, applying your brand colors, exporting the file. You walk away. You come back. It's done. And it doesn't stop at logo design. Think about submitting your tax return across multiple government portals, navigating forms, uploading documents, pressing submit across 3 different websites. Think about executing a complex multi-leg trade on your brokerage platform, setting limit prices, selecting expiry dates, confirming each leg. Think about processing 50 customer refunds one by one through your Shopify admin. Tasks that require a human to sit there, navigate actual software, click real buttons. That's what Digital Optimus is built for. That's the category that no chatbot, no matter how smart, can touch. Because they can only talk. This one acts. So the claim is that this system can do anything a human with access to a computer can do, like the examples I just mentioned. In his February 2026 interview on the Dwarkesh podcast, weeks before the official announcement, Elon had already framed the ambition this way. Can you do anything that a human with access to a computer could do? That's the best you can do before you have a physical Optimus. He added, and I'm quoting here, "I'd be surprised if by end of this year the digital human emulation has not been solved. End of 2026. That's the timeline on the table. But before we talk about what this means for the market, you need to understand the hardware piece, because that's where the real moat lives. and most people miss it entirely. Now here's where it gets interesting, and honestly, a little mind-bending. The AI-4 chip that powers Digital Optimus costs around $650, but Tesla has already shipped millions of them, inside the cars sitting in garages right now. So let me reframe how you think about a Tesla. Right now, the AI-4 chip inside your Model Y sits idle for 8, 10, 12 hours a day. It's just waiting. It's a powerful piece of compute doing absolutely nothing while you're at work. But with Digital Optimus, that chip, let's call it Tom, is no longer just a driver assistance computer. Tom becomes your friendly coworker. Tom has a job. While you're in a client meeting, Tom is on your screen, executing your tasks, running your workflows, navigating your tools. That Canva logo we talked about, Tom built it. You were on a call. Tom was in Canva. Musk confirmed this directly on March 12th, quoting, "Your car can do office work for you when it's parked. Your Model Y doing your job while it charges." Think about that. And on March 12th, Musk added a follow-up detail that I don't think got nearly enough attention. He said, "We're also deploying millions of dedicated Digital Optimus units in the field at Superchargers, where we have approximately 7 gigawatts of available power." 7 gigawatts at Supercharger stations, globally. Now, I want to make this crystal clear because I think this is the part most people glossed over entirely. And it's arguably the most strategically significant sentence Musk has said about this product. What he's describing is this: Tesla is physically installing dedicated AI-4 compute units, not cars, standalone boxes, at Supercharger stations around the world. Permanently powered, always connected. And those stations already have massive electrical infrastructure in place. Here's what that means in practice. Say your company subscribes to Digital Optimus. You assign it a task. That task doesn't run on some distant AWS server farm. It runs on the nearest Supercharger compute node, potentially 1 mile from your office. You are, in effect, renting a Tom. Tesla is the employer. You pay the subscription. Tom does the work. And Tesla does this at a scale nobody can touch. Every Supercharger station becomes a compute node. Tesla already owns the land. They already have the power running. They already have the hardware deployment operation. Digital Optimus is the software layer that turns all of that into a global, distributed AI workforce for hire, the AWS of digital labor. No software-only competitor, not Anthropic, not OpenAI, not Google, can build that without spending billions on physical infrastructure from scratch. Think of the Supercharger network like Amazon's first warehouses, already built, already paid for. That is a moat that isn't easily priced into a model. That's a completely different value proposition than any car company has ever offered. Now, if the hardware story is Tesla's moat, the labor market story is the size of the prize. And the numbers here are genuinely staggering. Okay, let's zoom out, because the investor thesis here isn't just about Tesla's hardware, it's about the market that hardware is addressing. According to Forrester research, there are over 1 billion knowledge workers globally. That's the definition. People who spend their working day in front of a computer, processing information, managing workflows, writing documents, analyzing data, communicating, moving things from one system to another. In the US alone, Bureau of Labor Statistics data, that's roughly 100 million workers. And their combined annual compensation? McKinsey puts it in the range of $10 to $11 trillion per year. Globally, McKinsey scales that figure to roughly 50 to 70 trillion. Now, I want to be careful here. I'm not saying Digital Optimus is going to replace 1 billion people. That's not the argument. And frankly, it's the kind of overclaim that undermines serious analysis. Complex judgment, relationships, accountability, creativity, these aren't going away because a screen agent can navigate Salesforce. But McKinsey's research, specifically their report on disruptive technologies, identified roughly 230 million knowledge workers whose core daily tasks are substantially automatable by AI systems. 230 million people. That's not some abstract statistic. That's roughly the size of the entire US workforce, doing screen-based, repetitive, workflow execution work every single day. Data entry, document processing, report generation, system navigation. Let that number sit for a second. And the economics of that substitution are the point. If software can execute those tasks at, conservatively, 20% of the cost of a human doing them, which is roughly how enterprise software has always been priced relative to the labor it replaces, you are looking at a market opportunity measured in the tens of trillions globally. McKinsey put the potential economic impact of automating just that slice at $5 to $7 trillion. The white-collar recession. It's a phrase that's been used a lot in 2025 and 2026. Hiring for professional roles has already slowed materially across finance, technology, and consulting. AI is already doing it quietly. What Digital Optimus represents is the product layer that could make it explicit, scalable, and commercially deployed at a price point that any business can justify. That's the labor market story. Now, Tesla isn't approaching this in isolation. And to understand the full scope of what they're attempting, we need to step back for a moment. Here's something worth holding in your head before we get to the valuation. Digital Optimus doesn't exist in isolation. In 2026, Tesla is simultaneously launching Cybercab, the autonomous robotaxi targeting volume production this quarter, and Physical Optimus Gen 3, the humanoid robot targeting high-volume production by summer 2027. Digital labor, autonomous transport, physical labor. 3 pillars, 1 calendar year. The framing that I think is most useful, and this is the non-consensus take worth sitting with, is this. Tesla is not an EV company trying to become an AI company. Tesla is an AI company that happens to sell EVs right now, while the AI product lines are still in the ramp phase. The cars are the cash flow machine that funds the R&D that builds the AI products that will eventually dwarf the car business in revenue and margin. Digital Optimus is the clearest single piece of evidence for that thesis that we've seen yet. Which brings us to the stock. And this is where it gets complicated, in a way that I think most analysts aren't being honest about. All right, the stock. Let's get into it. As of this recording, Tesla trades at roughly $400 per share. Market cap, approximately $1.5 trillion. And here's the context that makes this interesting. Tesla's trailing 12-month earnings per share is around $1.07. That puts the trailing price-to-earnings ratio at roughly 370 times earnings. The forward price-to-earnings is around 190. Revenue for fiscal year 2025 actually declined year over year, down about 3% to roughly $95 billion. Automotive margins are under pressure. Deliveries for 2024 marked the company's first annual decline. So on traditional metrics, Tesla is, to be blunt, an extremely expensive stock. The market is clearly not valuing Tesla as a car company. At 370 times earnings, what the market is doing is paying a massive premium for a bet on what Tesla's earnings will look like 5 to 10 years from now. So the real question isn't, is Tesla expensive? It clearly is. The question is, what exactly is the market pricing in? And does Digital Optimus change whether that bet is rational? Let's do the decomposition. Tesla's automotive revenue is roughly $77 billion annually. At a generous 5 times revenue multiple, how you'd value a margin-compressed car business, that's worth maybe $400 billion. Tesla's current market cap is $1.5 trillion. So the math implies the market is already betting roughly $1.1 trillion on Tesla's something else. Robotaxi, Physical Optimus, full self-driving licensing, energy storage, and now, Digital Optimus. Now I want to walk through 2 scenarios, not price targets. I'm not going to give you a number and call it a forecast, but 2 honest stress tests, because serious investors think about both sides. The bull case first. This is assumption-based, flagging that explicitly. Assume Digital Optimus works as described. Assume Tesla and xAI together capture just 1% of the US knowledge worker automation market over the next 5 years. The US addressable market, based on McKinsey's labor cost estimates and software priced at roughly 20% of displaced labor cost, comes out at roughly $200 billion annually. 1% of that is $2 billion in annual recurring revenue. At a software-as-a-service multiple of 15 times, conservative for a high-growth AI product, that adds $30 billion to Tesla's market cap. Scale to 5% penetration? That's $150 billion in incremental market cap from the US alone. Scale globally. The knowledge worker wage base is 5 to 7 times larger, and the numbers become genuinely difficult to put a ceiling on. Now the bear case. And I think this is the part most Tesla content skips, so I'm not going to. If Digital Optimus misses its timeline, which is entirely plausible given Musk's track record, or if the revenue flows primarily to xAI rather than Tesla, or if cloud-based competitors close the latency gap before Tesla achieves meaningful distribution, then what you are holding is a car company trading at 370 times earnings with declining revenue. And the math on that is brutal. Strip out the AI optionality entirely. Price Tesla purely as an automotive business at 5 times revenue, and you get roughly $400 billion in fair value, against a $1.5 trillion market cap. That's a potential drawdown of over 70%. I'm not saying that's the likely outcome. I'm saying that's the floor if the AI thesis fails. And any serious investor in Tesla needs to hold that number in their head alongside the upside scenarios. The commercial terms of the Tesla xAI collaboration have not been disclosed publicly. Grok is xAI's technology. xAI is now part of the SpaceX structure. Tesla invested $2 billion in xAI, so Tesla has equity exposure. But what that stake is worth, and how the Digital Optimus revenue gets split, is not something anyone outside those companies can tell you right now. If xAI captures the majority of the subscription revenue, and Tesla receives primarily hardware margin, the bull case math changes materially. That's not a reason to dismiss the thesis. It's a reason to size your position appropriately and watch the disclosure carefully when it comes. I'm genuinely curious where you land on this one. Does the Digital Optimus thesis change how you think about Tesla's valuation? Or does 370 times earnings still feel like too much to justify regardless of the AI story? Drop your view in the comments. I read every one. Now, before I give you the conclusion, let's be direct about what else could go wrong, because that's the part most Tesla bulls skip. First, Musk's timeline. He said digital human emulation will be solved by end of 2026. Look, Musk's timelines have historically been directional. Full self-driving was 1 year away for roughly 6 consecutive years. Cybercab was announced for 2024, launching in 2026. Build in a discount, possibly a substantial one. Second, competition. Musk's framing is that no other company can yet do this, and the local real-time processing via low-cost hardware is a genuine differentiator. But Anthropic, OpenAI, and Google are all aggressively building computer use agents. Cloud compute costs are dropping. The hardware moat narrows as cloud latency and cost improve. Third, the commercial structure. The value capture question is unresolved. Tesla's path to xAI upside runs through a $2 billion investment that's now inside SpaceX. The revenue split on Digital Optimus isn't disclosed. These are material unknowns for the Tesla investment thesis. And fourth, there's an active shareholder lawsuit. The Cleveland Bakers and Teamsters pension fund is suing Musk, alleging he diverted Tesla's AI talent and NVIDIA GPU shipments to xAI for personal benefit. This announcement increases the strategic overlap between Tesla and xAI, and that's precisely what raises the materiality question the lawsuit is built on. It's an investor overhang, not a verdict, but it's worth monitoring closely. And here's the question I'd put to you. Out of the 4 risks I just walked through, timeline, competition, the xAI revenue split, and the lawsuit, which one concerns you most? Let me know in the comments. It'll shape what I dig into next. So, what's the takeaway? Digital Optimus, or Macrohard if you prefer the better name, is the first concrete product to come out of Tesla's $2 billion investment in xAI. It's a real-time, dual-brain AI system, Grok for reasoning, Tesla's AI-4 chip for local execution, designed to autonomously operate any computer software. Musk's stated target? Anything a human with access to a computer can do. Timeline, end of 2026. For Tesla, the company, this is the clearest articulation yet of what Musk means when he calls Tesla an AI company. Not just autonomous driving, not just physical robots, a full AI labor stack targeting meaningful deployment within a single calendar year. For Tesla, the stock, the market is already pricing in a massive AI optionality premium at 370 times earnings. The bull case says Digital Optimus makes that premium justified. The bear case says if the AI thesis fails, you're holding a very expensive car company with over 70% downside to fair value. The asymmetry here, which is kind of what this channel is about, is straightforward. If even a fraction of the Digital Optimus vision is realized in 2026, the current valuation starts to look like it was pricing the right future at the wrong confidence level. The downside is real and quantifiable. The upside is something that genuinely doesn't have a clean ceiling. Whether that asymmetry is one worth taking a position in, that's your call to make, not mine. Nothing in this video is investment advice. I'm not your financial advisor. The analysis is here to help you think, not to tell you what to do with your money. Do your own research, understand what you own, and make sure the thesis is yours before you commit capital to it. One question before you go. Would you want a full Tesla deep dive as a separate video? Valuation, Cybercab, Optimus, the full picture. Let me know in the comments. If enough of you want it, that's the next one. If this analysis was useful, subscribe and hit the like button. I know that sounds like a standard ask, but for a channel at this stage, it genuinely matters. Every like tells YouTube this video is worth showing to more people. It's the single most direct way you can help this channel grow, and I appreciate it more than I can say. Links to the investing tools I use are in the description below. If you sign up through those links, it costs you nothing, and it supports the channel directly. Every week, we look for opportunities where the potential upside is structurally larger than what the market is pricing. That's the whole game. I'll see you in the next one.